What is happening, traders? Thank you for tuning in.
We're still coming to you from Los Angeles, California.
And we're back with another episode 25. Today we're going to be discussing the meme stock darling, Wish.
Oh yeah, and that means it's definitely going to be the best pod yet. This is Andrew.
This is Jason.
And we are Let's Talk Trades. Wish has taken over Twitter, Reddit, Wall Street Bets, a lot of retail investors, and it's basically one of the top meme stocks right now. They're trying to be like GameStop and AMC, but they're not quite there. And they hope that Wish will turn into an e-commerce giant like Amazon and Alibaba one day.
After IPOing at the end of 2020, the stock has had a rocky debut. After shooting to above $30 in February of 2021, it has since dropped to below $10. And it's still sitting around the same price, around $9, even after a small surge that pushed the share price up almost 50%. Still a far cry from its recent 52-week high of $32.85.
So what's the deal here? What's going on with Wish? Why are all these investing communities falling in love with Wish? And why are the institutions and hedge funds not quite as bullish?
All right, guys. So let's start at the beginning like we like to do here at Let's Talk Trades. Wish was founded by CEO Peter Sholswecki. Sorry if I butchered that, man. Someone connect with me and tell me how to say that properly. In 2009, with the initial idea to build a next-generation mobile ad network that would challenge Google's AdSense.
But then they quickly pivoted business models, just like Giannis did in the finals, and they created an app that lets users create a wish list. Users could use this wish list and send it out to friends and family during the holiday season, and that way you would get presents that you actually wanted, and you could avoid this awkward thank you, and in the back of your head you're never going to use that.
Wish had grown its user base to 500,000 users by 2013, and at this point they released their Wish e-commerce platform.
This platform allowed third-party merchants in China reach a global customer base and sell low-priced products. So one reason they're a lot different than all the other e-commerce apps out there is they really focus on no-name brands and just offer discount products only. And they claim this is an underpenetrated market.
They have 500 million registered users, 101 monthly active users, and over 550,000 merchants. And they've been able to build out the merchant side of their app platform along with the user side, allowing them to focus on both the merchant and consumer, giving them two customers. Now, we said they have 550,000 merchants, but most of those merchants are in China, and so the products are incredibly cheap. The delivery times are long, incorrect sizing, poor quality. The list just goes on with Wish products. In their latest investor presentation, they say, we believe the next 1 billion e-commerce customers will be these value-conscious consumers. So Wish is banking on the discounted shoppers and households that make under $75,000.
Yeah, they highlighted this number 75,000 in their investor presentation. They said in the US there's 60 million households that make under 75,000, and in Europe there's 300 million. And it turns out that 75% of Wish users right now.
They're targeting Gen Z, millennials, and low-income households that are so-called bargain shoppers. Now, guys, e-commerce allows you to compare site prices really fast, and so Wish is going to have cheaper prices, cheap delivering, just bad quality and longer delivery times, but their customers don't seem to care, so party on, Wish.
They might be able to shine in this corner. So who are they going to be competing with at the end of the day?
So, guys, you have to think of Wish as a competitor, but a small little brother competitor. They're not going to be going for a big market share. They're going for a niche market in discount e-commerce.
Yeah, they're not going to be really competing against Amazon, the king of e-commerce, whose founder just went to space. They are kind of competing with AliExpress, which is an arm of Alibaba, and kind of eBay and Groupon, even though they kind of have their own differentiators as well.
Exactly. Groupon is definitely discount focused, and so it is something similar to a Groupon, but they're different. And the one I think of is, like you said, AliExpress, Amazon, but discount e-commerce is different than what Amazon is. So, but even Amazon's really cheap, and so still, I don't know. I think Amazon's really gonna have a strong grip on this market.
Amazon could muscle their way over and maybe even take Wish out by trying to offer more low priced, no named items. One of Wish's main competitive advantages is that they have that blitz buy, where it makes it feel like you have a game show on the app.
I mean, I wasn't all that impressed with it, but yeah, I can see how if you just want to buy random things, how it is exciting because at first I was really hyped until I started seeing the products. Maybe my algorithm wasn't well or not good or, it's brand new. So, I'll give Wish another shot.
According to their CEO, that like 75% of their sales occur without a search query. So that means these people are just opening their phones, opening the Wish app, and then just buying whatever pops up. So it seems to be working so far, but we'll have to see if it pans out for them in like 5 to 10 years.
Now, guys, we're going to look at the bull case and a bear case, just a few reasons of each on why Wish is either a good stock or a bad stock.
All right, we're going to start with the bull case. And one main reason is that they're a main sponsor of the Los Angeles Lakers, which, of course, I'm a huge fan of, so I might be a little biased. But with that kind of marketing and exposure, everyone's going to have the Wish app and everyone's going to be using it to buy whatever they want.
Yeah, I really like the idea of entertainment buying as a focus. The spin the wheel thing, it's really an attractive feature for people that are bored at home. My girlfriend just likes to buy random things. And so I think it attracts that kind of person that likes to just buy random things at random because it is fun and it does capture you and it does have you coming back.
And those people are out there.
Exactly. And there's a lot of them out there.
And another reason for the bull case is there's all these COVID variants going around, especially this Delta one. So that could keep people in their house again for a long period of time, and it's going to increase the online transactions.
In 2020, their revenue surpassed $2 billion. So, I mean, they're definitely up and coming, but they're not competing with Amazon yet, guys.
One big difference between Amazon and Wish is that Wish isn't building these huge fulfillment centers. They're actually utilizing local small shops to warehouse their items, which is also beneficial to the local shops because it could increase their store traffic if a Wish user decides to pick up their item there rather than waiting a few weeks for it to get delivered to their house.
Yeah, but this actually brings me to my first point in the bear case because Amazon spent so much money expanding their logistics so they're able to deliver you fast, reliable, speedy service. And that's what we love about Amazon. I can buy something, I know I'm going to get it in 2 days, maybe even tomorrow. And Wish just can't provide that. And that's where I think they're going to fall short, even though their customers are willing to accept that. I just don't think the overall public is going to be okay with that.
Yeah, Amazon's not just the app like Wish. They're the fulfillment center, they're the logistics, they're all the technology behind it. They even have the Amazon Web Services now. And that could be one reason why they're not profitable still. However, a lot of companies like Wish, when they're growing so much, they don't make money. But right now, Wish actually lost $750 million in 2020. But these customers seem to be staying loyal with this low quality products, but we're going to see if that keeps happening in the future.
They're spending a lot of money to get new customers just to give these customers low quality products, long wait times.
Because they claim that if they weren't marketing so much, they would be profitable.
Now, Bank of America analysts expect by 2025, there's going to be 19 billion online products shipped. And Amazon is projected to control 30 to 40% of that market. So where does Wish fit in this 19 billion? Now, in 2020, they moved over 640 million packages. Not really going to compete with Amazon.
Yeah, they're not going to have the whole pie, but Wish is really just hoping to have one small slice of that pie. The really low discount shopper that doesn't mind waiting weeks for possibly the wrong item.
But another red flag, guys, their CFO resigned 6 months after they IPO'd. Why? I don't know.
Yeah, we don't know right now, but Raha Bar actually started in 2016. And when he started, the revenue was about $400 million. And now they do $2.5 billion annually.
All right, guys. So as we like to do here, we're going to have a little partnerships going on.
Got some hot takes for you guys.
So we think Universal Music Group should partner with Wish and be main distributor of all Universal Music Group merchandise. Billie Eilish, Drake, Taylor Swift, Lady Gaga, sell all the merchandise, up your quality, get your Wish brand out there.
Yeah, if they could be an exclusive dealer, they're going to bring a lot more customers who come to buy the exclusive Universal content and then buy a couple other things, of course, while they're there. And my other hot take would be that Wish needs to renegotiate this Lakers partnership so they could be the exclusive place to buy all the Lakers gear as well. And if they can't make that happen, find someone to be an exclusive dealer with. Just like Jason said, maybe Universal Music Group.
I think the WWE would be cool too. I mean, the WWE is very, very trendy. It's in with the younger crowd. It's in with the older crowd. I mean, that'd be a good one.
Man, if they could do any team, any NBA team, I'd be happy for Wish. They need to up their quality, get some better content on there, and hopefully, eventually, the meme community will be right and the stock will moon.
Yeah, the meme community is definitely behind it, guys, but the quality of their products is not that good. So Wish really needs to change the quality of their products if they want to survive.
Or is the consumer that values bargain hunting gonna be able to push Wish to the moon, just like Mr. Zach Morris claims? So to recap, while Wish has huge potential, they're gonna need to start turning a profit soon, or they're gonna be in a lot of trouble, and Amazon might just move into their little tiny piece of the market. Thanks for listening, traders, and I hope for a Wish short squeeze. Thanks for tuning in, guys. As always, see you next time. Peace.
Peace.